Hello friends, welcome to another video. In today's video we are going to talk about a breakout strategy for intraday and the scalping trading. And before going further into the video, we are going to talk about a few points, and these points are that first of all, we should make sure that we are trading this during the high volume time. The second thing is price should be ranging. The third thing, we should make sure that there should be a clean area on the left, right? Fourth thing is we are going to trade this strategy on the 30-minute time frame. And fifth one is I'm going to take you on the and we'll explain you how we could have traded this strategy during the last week by taking you onto the charts of the gold throughout the last week on the 30-minute time frame, and we'll see how we could trade this strategy there. Anyways, now let's see that suppose when we come to the charts during the high volume time, we see the price like it's suppose ranging, and by that I mean that you know, it's like suppose we find the price like okay, now let me draw a few more candles. Okay, so okay, we are going to see fine, cool. So now we could see. So now what we know that there is a resistance right here and there is a support right here. So now the price is ranging, and so we are going to talk about how we can trade this breakout strategy. Now this as we could see on the points that I mentioned, it should be high volume time and the price should be ranging. Now the price is ranging and clean area on the left hand side. So what do I mean by the clean area on the left hand side? So by that I mean that so let me draw a few more candles so that I can explain you clearly what do I mean by a clean area on the left hand side, right? So now as we can see, the price is ranging, and we are trading this strategy during the high volume time. That can be pre-London or London Open, or it can be pre-New York, New York Open, NYSE Open, whatever the case may be in like for the Forex I'm talking about. So now as we can see, if the price break out of this range on the upside, we have the clean area on the left hand side. Same way, if the price break down to the downside below the support, we have the clean range on the left hand side. So that is what do I mean by the clean range. Now we are doing this on the 30-minute time frame. So now let's see and let's talk about what do I mean by this strategy. So now what we need is we need a candle close. We need a candle close above this resistance. So now once we have the candle close with the wick, so what do we need now? We need the next candle to open, make a bottom wick, and once the candle start breaking the high of the previous candle, we are going to enter the trade, and we can target anything on the left hand side where we have the resistance. Depending upon the market structure, you can see where there is resistance, so that can be our target. So basically in this case, we are going to enter the trade right here. Once we break the high of the previous candle, the target is depending upon where we have. So the stop loss is just below the low of the current candle, or it can be below the low of the previous candle. Now normally it depends, because I like to keep my stop loss just you know, under 20 pip, like 15 to 20 pip, you know, between 10 to 20 pip, you know, 12, 15, 16, 17, under 20 pip, right, on the gold. So there's going to be one variation here for this strategy. I'm going to tell you one more variation, right? And the second variation is, suppose after we have a candle close bullish above the resistance and the next candle does not break the high of the previous candle, but we get a bearish candle close. We get the bearish candle close, something like that. Now the candle closed bearish, but we close above this support, right? So in that situation, what we do, we wait for the next candle to open, but the candle should not break the low of the previous red candle. So once we start breaking the high of the red candle, we can enter the trade, you know, keeping the target as the previous case. In this case, our entry will be once we break the high of once we break the high. What is this? What is this? Okay, so once we break the high of the previous red candle, we are going to enter the trade. Our stop loss is going to be below the current candle, which is right here, and it should be like 15 to 20 pip maximum, and the target, as you can see. So that's going to be the second variation. Now the same is true on the downside as well. Like if we get the same scenario onto the downside, like we get a candle close below the support, so what we do, we wait for the next candle to open, make a top wick, retest this area, and once we start breaking the low of the previous candle, we enter the trade. This is going to be the scenario onto the downside, and it's going to be something like the stop loss is above the current candle, and the target is depending upon where we have the support, the next support on the left hand side. So this is going to be the case onto the downside. Now let's go to the gold chart and see how we could trade this during the last week, right? Okay, so now let's go to the gold chart. Okay, so where was the Monday? The Monday was right here. This was the Monday. So now I come to the charts every day, like during the pre-London time, and pre-London is something like 2 hours before the London Open, right? So when I come to the market, I come to the market around this time. So now there is one more thing that I forgot to tell you about this strategy, and that strategy is if we are looking for the breakout setup in the direction of the trend, like when the price is making higher highs and higher lows on the 30-minute time frame, right? So if we are looking for the breakout in upward direction in that case, because we are making higher highs and higher lows, then that's going to give us a higher winning ratio, win rate, as compared to looking for a breakout setup opposite to the main trend. Now I'm going to explain you that right here. So as we can see, I come to the market like around this time, right? So once I came to the market, I saw that, okay, we have a resistance, price already made the resistance, right? And there is a support as well right here already. So I came to the market around this time, and so what I need is either I need a close above this resistance or I need a close below this support, because we have to make sure if we close above this resistance, we have a clean range on the left hand side. If we close below this support, we have a range of minimum like a, around 28-30 pip until here, and then we have another range below that point. So what I'm waiting for, so the candle, as we can see, this 30-minute candle closed below this support. Now candle definitely closed below the support, but the next candle did not break the low of the previous candle, and that's why I did not, I should not enter the trade. So anyways, the price is ranging here, and now as we can see, the candle closed above the resistance. Right now the candle closed above the resistance, but it's a little bit tricky. As we can see, there is a long wick as well, because you know that we are going to enter the trade when we are breaking the high of the previous candle. So, and in that situation, that entry will be far away from the zone. Normally we have to take our entry pretty close to the support or the resistance zone, which is recently broken. But anyways, the candle closed above the resistance, and the next candle closed bearish, right? We still did not break that high. So in this situation, which I already mentioned you during the variation of the breakout strategy. So we have this bearish candle close, so once we break the high of the previous candle, we could enter the trade. So in this situation, we could have entered the trade keeping the stop loss just below the candle. So in the target, or a target would be just depending upon the resistance. So as you can see, resistance into this area, so that could be our target. Now I entered this trade and I close it a little bit in profit, because the price moved above and then it came down. It wasn't looking good, but I entered this trade. So anyways, in this situation, as we can see, the price broke the high, we entered the trade, and then it closed like this. So either you could have closed it break even, or you could have lost this trade, or maybe once this candle closed something like this and the next candle broke the low, so you could have exited the trade. Anyways, this didn't do what we wanted. So now, as we could see, we are going to move our resistance to right here, and the support is going to be the same. So we did not break the high, didn't break the low, and this candle broke the low, but it closed pretty far away. And also, I don't trade during this time, so if you are trading, you have to do the same process as I do. So we are moving to the next day. So the next day, I come to the charts around this time. So when I come to the charts around this time, I see that the price has already made a resistance. And if we talk about, so okay, I come around this time, and so the price already made the resistance, and there is a support already right here. So what the price did, price made this support. So this is a resistance, this is a support, and so price closed below the support. So now, as we can see, this was the range, price closed below the support, but the price did not break the low of the previous candle, so we did not enter this trade. Anyways, we waited for the price to close above the resistance. Now you might say that on the left hand side we have some problems, we have the area is not clean. Yes, it is true, but sometimes we can because as I mentioned that we have to trade this strategy during the high volume time. So during the high volume time, we anticipate the price to break such kind of zone. So you might or might not take this, but for the process, I'm going to tell you that there is a resistance, and now we have a new support. So we have resistance, support, and as you can see, this new candle broke and closed above the previous resistance. So we could enter the trade once the next candle break the high. So we could put our stop loss below the current candle, and target can be the previous target. The target for first target can be this one. The second target can be as you can see, this is going to be our next target. So now that's one entry. Then we found one more entry, and the second entry was right where we had this bearish candle closure, as I mentioned that during the variation of the strategy. So we can take second entry, the stop loss below the current candle. Once we broke the high of the red candle, we could take the entry. As I mentioned, guys, the area is not very clean, but we are just anticipating the price during the high volume time to break it. So that's the only anticipation, and that you are going to get with the experience. If you're pretty much new, you just wait for the clean area only. So now what the price did, price made a high. So price made a high, so we got a new resistance, right? We got a new resistance, and so we waited for the price to make a support. So the support has been made, resistance has been made, and as we can see, the candle closed, but that's closed pretty far away from the zone, and so we are not going to enter the trade. Anyways, we are moving to the next day. So next day, I'm going to come to the charts around this time, and I could see that okay, this was the support, and this was the resistance at that time, right? So as I could say that price made a lot of movement to the upside, so definitely we were looking for some kind of retracement, and the price did not retrace here. So what we're going to do here is that okay, price did not retrace, so this was the support. As you could see that the price closed below the support, so price closed below the support, and the next candle move broke the low. So definitely you could have entered this trade, but as I mentioned that because the price is making high highs and high lows, so there is a more probability of a higher winning rate if you're looking for the breakout trade in the direction of the main trend. So if we get a break and close in this direction, that's going to give us higher winning rate. Anyways, once we close below this area, so we just enter the trade and a stop loss above this, and as you can see, we just hit the stop loss, so it's not working in our favor as we wanted. Anyways, what we did, we moved our support right here and resistance right there. So as we could see that there is a candle close here. So this candle close, I mean, this is somewhere the time where I don't trade, but anyways, you could see that the price closed above this resistance, and the next candle just broke that high. So as we could see, we moved around 30 pip after breaking the high. So normally in such kind of situation where we have the candle close above the resistance or below the support, and we have a large wick, so it's a little bit cautious and we should wait for a more confirmation. So you know, we cannot so we have to be cautious while taking this trade. So if you wanted to take this trade, you could have taken the trade somewhere right here, but I'm not sure if the candle make the bottom wick first or not. So what happened, so you could see that okay, at least we made you know, something like 30 pip in this scenario. But anyways, so this is going to be our new resistance, and support is right here. So price didn't break the low, didn't break the high, so we come to the next day. I come to the charts around this time, and by that time price already made that high. So we have already made that high, and as we can see that we already have a low here. So we have the high, we have the low. So price didn't give us a break and close above the high, below the low. So in this case, as we could see, there is a close below the low, but the candle closed pretty far away from the zone. And once we, you know, get it, what I mean to say, the further we move away from the zone, there is more probability of the price giving us a pullback. So normally we take our entry pretty close to the zone, so we are not going to take the entry, although as we could see, we got a close, price retrace, everything was there. So something like this could have been entered, but personally I don't take this trade, right? Anyways, we are coming to the next day. The next day is going to be right here, and I come to the chart something like somewhere around this time. So as you can see, support is right here, and resistance, I would say this was the resistance. So I come to the charts like this. I would not consider this as a support because I think there is not a clear, not enough range. It's a 17-20 pip range, guys. I look at least 25 to 30 pip range for the trade. So this is going to be my support, because below this support there is going to be enough range to move at least, you know, 50-60 pips. So anyways, so we waited for the price to give us a break and close. So as we could see, the price broke and closed above here. But one more thing, you are going to find out that there is another resistance right here. So now this is going to be the resistance. We could see that this candle closed above the resistance, and the next candle didn't break the high, so we are going to move our resistance right here. So now this is going to be our new resistance, and above this resistance, this bullish blue candle open above the resistance, and the next candle, red candle. Okay, so this is going to be the variation that I told you, and this is going to be a kind of trade that we take. So we took this trade, and you could see that we, you know, it's during the pre-New York time, and we couldn't win this trade. So it didn't work out as we expected. So anyways, we lost this trade, or we manage our trade. I'll make separate video on how we can manage our trade. We manage our risk if the trade is not going in our favor, so that we can lose less than what we expected. Now, so what we see that, okay, this is going to be our resistance now, and now as we can see, there is a candle close above the resistance. So in this situation, what we could do, we could put our stop loss below the current candle low, and we could anticipate the price to move to the next resistance. As we could see, this could be our next resistance. Now as you can see, the price didn't go up till there, but in terms of the pips, we could see that okay, the price moved to 45 pip, and our stop loss was like 10 pip or something in this scenario. So we could have closed our trade once we could have taken some profits, depends, or once this bearish candle closed, we could have closed our trade, so just making something like 18-20 pips depending upon what you want. So now our next resistance is right here and support is already there. So that's going to be something, guys. That is how you could I mean, look for the breakout strategy in the on the 30-minute time frames. So that's it, guys. This was the video. Thank you very much, and see you in another video.